Hello, welcome to the Multifamily Podcast. Once again, here with Matt.sarro of Colliers International.
There you go.
Colliers, right? Yeah, Colliers International, up in the Sacramento area. And Matt, you recently, well, let me just say it this way. You and your partner, you guys released like a quarterly report on what's going on in the greater Sacramento area with respect to the multifamily market. And you've recently released one.
We
And
do. We do.
yeah,
And Frank's going to go ahead and attach a video. Essentially, at the first of every quarter, 4 quarters in a year, we're going to break down, how's occupancy rates looking in the apartment sector? How's effective rental growth? Other than that, we break down on the actual physical report, how many units are coming to the market and how this kind of affects everything.
mm,
And that comes out a month after each quarter. But every quarter, my partner and I have a little video just breaking it down. It's not an extensive report. It's not, 200 pages. It's just a little brief summary of what's going on. And additionally on that, every month we follow up with a little bit something new. So once every 3 months, we'll have 12 articles that basically explain what's going on. It might have to do with rent control. It might have to do with what the Fed's doing with interest rate increases. It might just be an article about a new apartment building or a new law around the zoning of apartments. The next following month, we'll break down every 90 days what sales activity we've not only seen in Sacramento, but the surrounding counties. We like to call it Sac Metro, El Dorado County, Placer County, Yolo County. And it'll essentially just show any 5+ unit apartment buildings, the date they closed, the size, the sales price, the cap rate, the price per unit.
nice.
Essentially, we take that information and we'll turn it into what Frank's about to show you here. Just an average price per unit you're seeing in the market, what's average occupancy, and what's the average cap rate on sold deals.
Yeah, this is pretty cool, man. Because obviously, as an investor, someone looking to buy and sell multifamily properties in the Sacramento metro area, as you described, this is great information just to keep your finger on the pulse of what's going on. The fact you do it, what, 4 times a year? Is that you do it
Four times a year, and then once a month, we'll actually have the breakdown of sales, and we'll actually have the breakdown of some apartment articles just to keep you updated. I mean, people are constantly coming to us and saying, where can I find more information? Well, here's a great way to just keep a pulse on everything, as Frank
Yeah.
put it. And then also, we send out a quarterly report every 3 months from my company, Colliers. So if you get on the e-blast with us, just fill out a form that Frank will provide, and we can get you all the information. And it's just an easy way to see what's going on. I mean, even if you're a passive investor who already owns, it's good to see, okay, what are buildings selling for to kind of put a marker on where your property might, be valued at. And then also, I mean, I know a lot of people, you may look for 12 to 24 months before you even buy your first deal, and it's getting comfortable. And some of this information you see on here, you might look at a deal and say, okay, Matt says the average cap rate's 5.8. I'm looking at this building at 5.5. You go to the listing agent, you say, look, I need this closer to a 5.8. That's where buildings are selling at. So it's just something quick and easy. I wouldn't use it as the Bible to your real estate or
Yeah.
multifamily investing needs, but definitely it's a good guide.
Yeah, awesome, man. Great. So yeah, so what I'm going to do, guys, is I will put, if you're watching us on the blog post, right, the website, down below, there's just going to be a form there. You just put in your name, phone number, email. That's it. Click a button. That information will go over to Matt. Matt will get you signed up for the continue. We'll subscribe you to these updates.
Exactly.
If you're watching us on YouTube, there will be a link in the YouTube description that you can click. It'll say click here to subscribe to Matt's update. You click there again, just bring you to the form. Just fill it out, and then he'll get it over there. But for the most recent report that you guys released, I will also put a link down
Beautiful.
below and on the website and in the description. So there'll be 2 links for you. If you're on the website, there'll be a form and a link. If you're on YouTube, 2 links where you can get that information. Based on the most recent one that you released, is there anything notable worth pointing out, or things pretty casual out there? What's
No,
anything?
absolutely. I think I'm glad you mentioned that because I did want to point out a few different things.
Yeah.
When you read articles about rental growth in separate submarkets, it's all over the board because it depends where they pull that information. So you may read Sacramento rents are down, which in some sense is true. When I look at some of the rent rolls that I receive from owners, let's say, for example, a Midtown one-bedroom apartment. And I'm not talking about a fancy apartment. I'm talking just your basic 10-unit box building, one bedroom. Well, last year, well, actually, I should say more like 12 to 18 months ago, we were seeing some of those basic one bedrooms without even a remodel reaching to about 1550. Well,
Hmm.
I'd say on these, lately it's more like 1450 on something like that. Maybe 12 months ago it was 1500, now it's 1450. So when you look at an outside lens, that's a $50 decrease in rent. But I will say a lot of the owners within the area, they're not at their max rent. They've had tenants there for 20 years, 10
Yeah.
years, sometimes 8, whatever, 2 years even. So they're behind the wheel a little bit on rental growth. So you'll see on a rent roll, one bedrooms in Midtown, 1100, 1200. So when you take the aggregate whole of the whole market on what people are getting on their rents, the average rental rate is up in Sacramento. For the last 8 years, we've had anywhere from 5 to 10% rental growth. This last 12 months, so 2024, we only had 1.8% rental growth. So as a whole, it's not bad. We're not negative. If you read some reports, you may see that it's negative from the peak, but we still have rents going up. And you'll see in other markets like San Diego, for example, they get about a 3 to 10% every single year, pretty steady. Sacramento's right up there. If you look at the top 10 rental growth markets in California, Sacramento's always on that list. If you even see it in the country, sometimes you'll see them on the list, and about 2 years ago. So rents are slightly up. Average rental rate, $1,989 in Sacramento. So, I mean, that's counting all different shapes and sizes and submarkets. Average occupancy, 94.6%. For years, we always hovered over 95%. Over the last 24 months, we have brought about 6,000 apartment units total inventory completed, if not slightly more. It might be more like 7,600, but some are still not full completion yet. So that's had an effect on the occupancy rate. It's starting to absorb a little bit. But essentially, if you have a market at 95% occupancy or higher, it means that there's a demand for more apartment rent. So the fact that we're at 94.6, I think that says that you might see construction come to a halt a little bit. You'll still see buildings being built, but I don't think as fast as a rapid pace as you've seen. And then additionally, the cost of building has gone up extremely, not just interest rates, so the cost of money, but the cost of lumber,
Yeah.
labor's gone up extremely. So you'll see a pause for that reason as well. And then just two more points on this report. We see an average cap rate at 5.8%. So I'd say, I just went with an investor this morning who's in 1031 exchange. Every deal I was showing him was about a 5.25 cap to a 5.5 cap. So I'd say you'd be lucky to get about a 6% cap rate, but it's definitely happening. But I'd say that's the average is a 5.8. I think that's spot
Okay.
on.
Yeah.
Average price per unit at about 201,000 a unit. Now that's totally jaded. Sometimes you have a large building that's sold at 300 a unit because it's brand new and it throws off the metrics.
Yeah.
I'd say the real average in Sacramento is probably for as a whole around 175,000 a unit. You'll see some
Okay.
of the C class stuff around 150. You'll see some of the A around 200, and it'll give or take depending how new or where the rents are at.
Interesting. This is great information. Yeah.
Sorry to
So,
spitball everything so fast.
but
Again,
it's
if you
good
got
stuff. No,
questions, you can fill out the
yeah,
form.
yeah, yeah. Just get the form, get subscribed. That way you get this
Right.
information all the time. I'm curious, real quickly, before we get out of here, out of the Sacramento metro area that you're talking about, these different areas, right? Is there anyone in particular right now that's kind of shining for you? Like this particular area is kind of, outperforming a little bit other areas,
Sure.
just by chance?
I'll tell you what, Midtown always was kind of the hot area, and it's going down a little bit, partly
Mm,
because they built so much. But all the surrounding areas, North Oak Park, what they call it, kind of that little triangle right off outside of Alhambra, North Oak Park, some parts of South Sac, the Pocket area, West Sacramento, right by the ballpark. The A's aren't just coming to the ballpark, but also it's so close to the Midtown that it's had a lot of rental growth. There's just not a lot of units. I sell some buildings up in the Placerville, Auburn area, and it's just so limited. It's tough to build in those areas because the rents just don't quite justify it. So that the occupancy rate is through the roof. It's just much
mm,
stronger than Sacramento. There's not enough units out there. So
mm.
those buildings are hot as well. So for example, Cameron Park, Lincoln's become pretty hot. I don't see that much multifamily inventory in Lincoln, but they're starting to build a lot of homes and apartments. So I think you'll start to see that pop up as well.
Mm.
So I mean, just outside Sacramento by sometimes 10 minutes, but as far as 30 minutes outside Sacramento, depending on the neighborhood, it's a pretty safe bet if you can manage to find a higher cap rate and a little bit lower price per unit. But if you ever see a deal, same thing with filling out the form. Even if you're represented by a realtor or you're working with the listing agent, I'm happy to give my opinion on investment that you're looking at.
Okay, cool, man. So the other point there would be that if you happen to own a building in those particular areas and you're thinking maybe now's the time for me to unload, you know what I mean, cash out on something, those would be pretty hot areas to list a property at this point as well.
Yeah, exactly. With the interest rate environment right now, there's no doubt when the rates go down, your value is going to go up.
Mm,
So it's kind of in this weird spot right now with interest rates 6 to 7%. It's hard to tell anybody that we're at the peak on the value of your
mm.
building because it's just not true. As rates go down, your value is going to go up. But if you do have a need to sell, whatever reason, sometimes partnerships, dispute.
Whatever. Yeah.
Sometimes you just find a new deal, maybe you're depreciated out or you just found a larger deal that you want. I'm always happy to put together a free evaluation of your property. Look, rates are up, but it's not a bad time to sell because I mean these apartments, there's a need on these smaller
Mm,
apartments. A lot of
mm.
people are looking whether for their 1031 exchange or just their first investment.
Yeah, yeah, good stuff. All right. So all of Matt's contact information is right down below if you're watching us on the website. And of course, it's in the YouTube description as well to reach out to Matt for all of your multifamily needs and questions and help, assistance, whatever. He's your guy. He's definitely got his finger on the pulse of everything. And so don't forget Lulu Capital as well. If you need some financing on any of that stuff, we'd love to help you out with that as well. All right. Hey, Matt, thanks so much, man. Appreciate
Thank
it.
you, Frank. You're the guy. I appreciate you.
Hey, man, it's my good pleasure. And it's a lot of fun to do this. So, all right. So, for all of you watching, thanks so much. Do us a favor, share, subscribe, all that kind of fun stuff. Fill out the form if you want to get if you want to subscribe to Matt's information that he releases all the time, and or his contact information is down below if you want to connect with him on anything multifamily related. All right. Have a good one. We'll see you guys
Awesome,
later.
guys. Happy
Adios.
New Year. Thanks for tuning in.
See you, Matt. Later.